After closing lower last week, with some sectors hit hard than others, as local focus remains on damaged businesses and infrastructure caused by civil unrest, as you saw in those pictures, and the impact on the economy. The JSE faces mostly weaker Asian markets this morning, with some concern over rising COVID-19 numbers. For an update now on the latest market moves, we're joined by Mia Kruger, Director of Research and Fund Management at Kruger International. Mia, very good morning to you and thanks for your time. The rand, with shares of landlords and retailers, took a beating last week. Now that things look to be slightly calm and somewhat getting back to normal, where does this put South Africa's economic outlook, in particular inflation?
Yes, so it's very difficult to estimate the impact that this will have on inflation straight away, but the economic impact that South Africa will have due to the looting and the destruction that we saw in the past week is severe. We've already heard from many of the listed companies that you alluded to, and they've come out with staggering numbers when we hear about the number of stores that have been damaged and looted, completely burned down. We've heard from Mr. Price Group, over 109 of their stores have been completely looted. Pepkor, nearly 500 stores. For Shini's Group, 190 stores. Now, these companies will definitely feel the financial impact. All of these companies are covered to an extent by the SASRIA cover, and it's just difficult to estimate the exact numbers at this stage. Even these companies haven't come out with narrow estimates yet, but it will be significant. We know that we were already in a recession in South Africa before we went into COVID-19 in the beginning of 2019. So this will be a very unfortunate event that's already impacted us severely, but will also impact investor sentiment and especially global investor sentiment towards South Africa in the coming months.
Yeah, let's talk company news for a bit. Woolworths releasing a SENS announcement detailing the impact of this unrest that we saw in South Africa, and the group also giving an update on its trading update in the 52 weeks ended 27 June 2021. Talk us through that update.
Yes, so they had good numbers when we consider the fact that there was a very tough trading environment over this past 18 months. We've seen companies, even compared to the low basis that they came out with in 2020, not show a very big growth, but still Woolworths came out, they had growth in the group sales of just short of 10%. They had very strong online growth. That was the trend that we saw from most companies and retailers, especially in South Africa and worldwide. Their retail sales online grew by 117%, and they also managed to gain market share in the food business. But as you mentioned, they did allude to the fact that still many of their stores in KwaZulu-Natal are closed, and they will only be reopening those stores once they feel that it's safe to do so for their workers and for their property. So yeah. Unfortunately, many of their stores have also been impacted by the rioting.
Well, let's move on to this particular one, and it's yet another company, but, well, let's see how you respond to this. So 2 weeks after a Cape High Court judgment, Mia, came out with that crippling blow to Steinhoff's bid to settle with its former shareholders, the company has increased its settlement offer to former shareholders by 66%. Help us make sense of this updated offer. Are shareholders likely to agree?
Yes, so I mean, there's so many numbers in the settlement deal because of the fact that all claimants aren't deemed on a similar basis. Firstly, the appeal that we saw about a week or so ago was the fact that Judge Lee Bozalak declared the key aspects of an original settlement plan, which involved Steinhoff's providing guarantees to financial creditors who held 465 million euros of bonds that was issued by Steinhoff in 2014. It announced that legally void, and Steinhoff will now be appealing that judgment. But despite that, they also came out and said that they will be offering claimants, especially the shareholders, the normal shareholders, which were eligible to receive between 6 and 9 cents to the euro, have now been upped to nearly 7 cents, and like you say, by 66%, it's not that big a number, unfortunately, in the increase to about 10 cents. And these companies or these shareholders are still not very happy about the fact that they will be receiving so little money in the deal. All the claimants have been influenced by this decision, and they will all be receiving more money out of the settlement if the settlement does go ahead. It still needs to be decided, and it still needs to be accepted by all claimants.
Yeah, let's close the conversation with a look at the commodities front. Oil prices dropping more than 1% this morning amid mounting concerns about crude surplus as COVID-19 infections continue. Now, this while the OPEC Plus agreed to boost output. Take us through what this means for oil prices moving forward.
Yes, so it seems like the initial increase in production will be a benefit to the oil price in the short term. We'll definitely see some reprieve in the oil price over the shorter term, but the expectation globally, and that's the main reason for the increase in production, is the fact that there is an increase in demand as we see global economies starting to recover, and we see substantial recovery where countries have vaccinated most of their population, the US, for instance, and many of the European countries, and the summer months now drawing to a close and winter lying ahead, there will definitely be an increase in demand. So we think that the reprieve on the oil price will most probably be short-lived as that demand starts to rise along with the production.
Mia Kruger, thank you very much for that market analysis. She is Director of Research and Fund Management at Kruger International.